This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, April 21st, 2015. Euro dollar. So the euro continues to consolidate just off recent 12-year lows at 104.62, and the market is going to need to break back below that 104.62 level to open the door for the next major downside extension. Until then, we could see some more choppy consolidation as the market continues to consolidate in the sessions ahead. But overall, the downtrend remains firmly intact, and an eventual break below 104.62 is seen towards next key downside barriers at the psychological parity level. Only back above 110.53 at this point would compromise the current bearish outlook, while yesterday's bearish reversal day does suggest that the market could be headed lower in Tuesday trade. Sterling dollar. So cable has recently found some good resistance up towards the 51 area, with the market stalling out ahead of that critical 151.65 high from the 18th of March. At this point, the downtrend remains firmly intact, and the market could be putting in a lower top ahead of a bearish resumption back towards the recent lows at 45.65 and below. Only back above 51.65 would delay but not negate the bearish outlook for the pound. Dollar yen. So dollar yen continues with its consolidation off recent 7-year highs at 122.03, and the market has really been locked within this consolidation over the past several weeks, if not months. Any dips in this market continue to be very well supported down towards 118, while ultimately only a break back below 115.55 would compromise the bullish outlook. Euro Swiss. So Euro Swiss has continued with its declines off that 108.15 recovery high that we saw this year back in February, and the market has recently broken down below some key support at 102.50, but a break and close below 102.50 will be required to open the door for a fresh acceleration to the downside back towards parity. Inability to take out 102.50 or to close below 102.50 on a daily close basis will suggest that the market could be finally ready to put in some form of a higher low and once again see some upside over the coming sessions. Aussie dollar. So Aussie dollar has been locked within a consolidation over the past couple of months, though the market has recently put in a fresh multi-year low at 75.33. At this point, the consolidation is classified as a bearish consolidation given the broader underlying downtrend, and deeper setbacks are favored with a fresh downside extension below 75.33 towards next key psychological barriers at 70 further down. For now, 78.938 is a good resistance point, and really only back above that level would delay but not negate the bearish outlook. Dollar CAD. So dollar CAD has recently seen some setbacks after breaking down below some critical support at 123.50, though this has done nothing to compromise the broader bullish outlook for the market. At this point, the market's looking for a higher low ahead of the next major upside extension beyond that 128.35 yearly and 5-year high and towards the 2009 peak at 130.65 further up. There is risk for additional weakness potentially down towards the 119 area, but again, setbacks right now should start to find support in favor of a higher low and fresh upside. Kiwi dollar. So the New Zealand dollar has been recovering over the past several weeks after putting in a multi-year low at 71.76, though the recovery is viewed as corrective with the market locked within a more well-defined downtrend. At this point, look for rallies to continue to be very well capped ahead of that 78.90 level going back to January, and really only a break back above this level would delay but not negate the bearish outlook. For now, look for the market to stall out in favor of a more immediate bearish resumption over the coming sessions back down towards that critical support at 71.76. SPX 500. So the S&P 500 continues to trade just off those record highs from February at 2120, though the market has been showing some solid resistance on rallies above 2100. At this point, we're going to need to see a clear break above 2120 or back below 2040 for clear directional insight. If the market does establish a clear break above 2120, this could open the door for a fresh upside extension towards 2200, while inability to establish above 2120 followed by a break back below 2040 would open the door for an acceleration to the downside and suggest that a top is in place with the move seen back below 2000. Gold. So gold has been in the process of consolidating over the past several sessions, though the market is now looking to put in a higher low at 1178, which will be confirmed on a break back above the 1223 to 1225 area. If the market can break above 1223 to 1225, then that will open the door for a fresh upside extension towards the 1300 level in the sessions or in the days ahead. At this point, any setback should be very well supported ahead of 1178, while only a break back below would compromise and potentially then put the pressure back on the downside towards that critical 2014 base at 1131. That's all for now.